Every market looks obvious in hindsight, but the moments that truly matter, the beginnings, the turning points, the crises, rarely feel that way when you're living through them. This podcast is about those moments, the decisions people make, the risks they take, and the lessons that only time can teach. Welcome to 20 Years of Mortgages by Mortgage Direct. 2007 didn't feel like a warning. It felt like this was just how things worked. On the surface, Spain's property market looked unstoppable. Prices rising, cranes filling the skyline, credit flowing freely. Things felt pretty good. But beneath that surface, structural weaknesses were building in easy credit, flawed assumptions, and the belief that prices could only move one way. Today, we're revisiting that moment, not to replay the crash, but to understand the psychology before it. We're joined by Mark Stücklin, founder of Spanish Property Insight, who was analysing the market around the time that it unravelled as a journalist writing a column for the Sunday Times titled Spanish Property Doctor. Mark, welcome. So Mark, take us back to early 2007, not the data, but the mood. So if you walked into a bank, a developer's office, or you're a buyer, how was the atmosphere? How was the confidence?
It was a very unusual period. It's a long time ago now, and lots happened. I mean, what came after it was the most dramatic stuff. But that was 2007 was let's say it was the peak of the bubble. And although I think the problems had already started brewing in 2006 and before. But that year, I remember one of the most dramatic memories I have was I tend to do for business, for writing articles and for my blog and for consulting. I was doing a lot of travel, but from Barcelona as far as Tarifa. So that's pretty much the whole of the Spanish Mediterranean coast. And it was dramatic how many building sites and cranes you would see as you drove. It was, kilometre after kilometre of building sites and cranes as far as the eye could see. So that really was a dramatic imagery of the period. And of course, Spain was just building, I think at the time, more than France, Germany and Italy combined. And it was a really over and outrageously pumped up building boom that all came crashing down. But that was one of the most dramatic memories I have of that period, just the amount of cranes you could see on the Mediterranean coast.
And what did you think when you were driving past them all? Did you think, is this going to continue? Is this going to crash?
Well, a lot of it was quite ugly, it has to be said. That was another thing. The whole building boom wasn't done very tastefully or very carefully. And there was a huge amount of speculation involved in the building boom and the entire bubble that had built up around the building boom was a function of the surging demand and interest in purchase, but a lot of that was speculative. And there was actually a lot of speculation which had come in a bit through the introduction of the euro, and which had taken down interest rates at the time. Prior to 2007, where they were unnaturally low, certainly far too low for Spain, one of the problems of a common currency. And that was what was fueling the boom. And then, of course, when prices started rising, especially on the land side of things, speculation really became entrenched. And that gave the impression that the Spanish real estate was just one big speculative area. And we've had a lot of trouble with that reputation ever since.
And you found it similar across the whole coast, along the whole coast, not different regions?
Yeah, well, there were some areas where they were more dramatic than others. I mean, there was some extraordinary building, especially what really was strange was in the off the beaten track places where you saw them, building, which I remember thinking, I don't know how they're going to sell this, because, one thing is the Marbella area or around Alicante and very well established areas. And of course, there they were building a lot. But really off the beaten track, Murcia was put on the map by a lot of development at that time, targeting offering kind of retirement second homes for foreigners, not for locals. And I remember driving around Murcia, writing an article on that segment of the market for the Sunday Times, and just rising out of the desert, these sort of pharaonic developments. It didn't end well, although it didn't end as badly as I thought it was going to. I mean, they're still there. I mean, it really put Murcia on the map. But it was really dramatic to see them building in the middle of nowhere.
And do you think those constructions were fueled by easy credit?
Oh, undoubtedly. I mean, this was the big, I think, one of the problems. It was more than just one, but one of the big problems, or one of the big causes of the speculative bubble that sucked in so many resources from the rest of the economy, and was the fact that money was easy after the introduction of the euro and the common currency, and interest rates were too low for Spain, but probably too high for Germany. Germany at the time was going through a difficult period economically, and Spain was booming. And there was this sort of funneling of European savings into Spain. And nowadays we've just got a few lenders, but back then there was lots of what they call cajas, or regional lenders, and also foreign banks. They were all keen to lend into the Spanish market, which was this absolutely booming, wild credit market. And so and they were lending to developers and to buyers. And you could really get a mortgage with no strings attached. It seemed to be a very easy lending period. And a lot of the local cajas, which have since disappeared, I can't remember how many there were, but there was 20 or 30, I think, or more. I just can't remember. But they were not run by bankers. They were run by politicians. And so they had their lending criteria was, especially when they were lending to developers. And so there was a lot of corruption there as well. But it was just an insane period in terms of lending. I mean, it was mirroring a bit what was happening in the US at the time with the subprime mortgage. A lot of the mortgages here were basically subprime, and it was very easy to get one. And so that was undoubtedly part of the story.
Yeah, I was going to ask you about the US subprime, and we were selling self-certification mortgages.
Yeah, what they called liar loans in the US.
Yeah.
So it was the same product here, I guess. I mean, I do remember that you could get 100% or more. There was ways to get more than 100% of the mortgage. So you could buy without putting any money in. Whether that was by overvalue, I don't know by law or by the regulations did not allow it, but you could overvalue the property and therefore cover the entire expense of the purchase with the mortgage. But whilst people thought that you couldn't lose, and there was this popular refrain at the time, which is "El ladrillo no te falla," which is like real estate never lets you down. You can't lose on buying property, and that was a quite widely held belief, and because it had been going on, the boom had been raging for several years, and people were very conspicuously making lots of money at the time. So nobody expected nobody expected to lose, but many people did. But at that time, there was a sense that it was just a one-way bet.
Mm-hmm. Absolutely. And I was rereading your article that you wrote in 2007 in the Times about the interest rates. And you were quoting that in August 2005, the rate was 3.22. And then by August 2007, it was 5.67. Mm-hmm. And for a €200,000 mortgage, for example, the premium is 300 plus more euros a month. Did you see that buyers were struggling who had committed to these mortgages when the rates went up?
Yeah, I mean, there was definitely. I saw it in the numbers, not because I wasn't dealing with any individuals. I wasn't involved in the mortgage business. I wasn't selling property, so I didn't have any personal relationship with clients who had bought using a mortgage. And at the time, it was by far and away the most popular type of mortgage was a variable rate mortgage. I think it was up in the 90% or more were variable rate, and interest rates were low leading up to 2007. But they started climbing. But in the early 2000s, they'd been low, far too low for Spain, and so everyone just went with a variable rate. And there was also other issues which came out in the wash subsequently about mortgage clauses which weren't entirely kosher, shall we say, and weren't explained properly to the people who were taking on the mortgage. Another thing is a lot of people who took on mortgages at the time would never have got a mortgage in a different time under more strict lending regulations or practices. So quite a lot of the people who were taking on mortgage at that time didn't actually understand the mortgage they were taking out. And this was especially an issue for British people buying in Spain, because all the contract and documentation was in Spanish. And they'd go to a notary and it would all be done in Spanish. And that didn't help them to understand what they were signing. So there were lots of issues deeper down about the kind of mortgages, but fundamentally they were variable rate mortgages, which when people were taking them on, it looked like real estate was only going to go up, property was a one-way bet, and interest rates were low. Fast forward a few years and you get rising interest rates to in the 5% range, which is really kind of a normal interest rate level. For many people would say below 5% is especially when inflation is, that's only a real interest rate of, if inflation is 3%, it's only a real interest rate of 2%. So that at 5%, but it started to hurt because prices were so high, people had taken out bigger mortgages than they could afford. And once they started having to pay a more normal type of interest rate, then it started to bite. But a lot of the boom was, they were buying off plan. A lot of the people that I were aware of, they'd bought off plan. And so in a way, the whole interest rate thing didn't really affect them because they hadn't even started on the mortgage. They were just paid up. They'd take an equity release from properties in the UK. That there was every kind of bad decision made for people putting money into Spanish property at that time.
No, absolutely. And one thing you mentioned in your article, so those that were buying like a second-hand property that's already built, because the prices had gone up, the mortgages became more expensive, that they were then renting out those properties on a short-term basis. And you mentioned in your article about the tourist licenses. So some clients then found, or buyers, that in the Balearics, for example, they couldn't do a short-term rental. How did you find that in the market, all the different regions and the tourist licenses?
Yeah, I mean, because it's so regional, the whole issue of holiday rental regulations, it does vary from region to region. So, and some areas it's more important than others because they're tourist hotspots. But yeah, a lot of people bought on the assumption that they'd be able to rent out, do holiday lets without any restrictions, and that's what they were told when they bought. And in some cases that might have been true at the time of purchase, but then new regulations were introduced, and subsequently it became much more difficult to do. In many cases, people were also just not told the truth when they bought. So, of course. But then the other thing is, it wasn't just regulations introduced; it was also when the financial crisis came along. And the tourism industry was affected. Everyone's affected. We had it was a very, very difficult period economically. A lot of people weren't spending. There were a lot of people in distress. The holidays weren't being spent on, and people didn't go doing holiday rentals as much as before. So on every front, people found that their costs were going up, and ability to finance those rising costs were under threat. So that's when the distress starts coming out.
Yeah. And in hindsight, do you think the bubble was economic or behavioural or both?
Well, I think they're very related. It turned out in hindsight, I mean, it was kind of obvious, but like all these things, it was staring us all in the face. And I remember thinking, this is just crazy. This is insane. This can't carry on. But it did carry on. I mean, when I started thinking that 2 years before, the proverbial hit the pan, and but it seemed to be everyone. I was there. Someone said that if the music, whilst the music's playing, you got to keep dancing, and so the banks were all doing it, and I mean, now in hindsight, it turns out that things had started slowing down fundamentally earlier than people would expect. I heard stories of banks, because the banks would have noticed things going wrong before others, and so they started changing their behaviour and changing their lending practice, not refinancing developer loans and stuff that had been done on a short-term basis, but they weren't about to start. It wasn't in their interests to start shouting fire. They didn't want to panic anyone, and the government didn't want to panic anyone. So But yeah, back in 2006, I think it was already the case that developers, especially on the developer, because that was where in the land market was very, very speculative, and people were buying land, and prices were dramatically escalating, and it was very corrupt. That's where the really big problem was.
So do you think in 2006 it was unsustainable then?
Oh, absolutely.
If not before?
Yeah, I mean, I don't know whether the whole thing was a disaster, and it was a disaster for everyone involved, for the Spanish economy. It distorted the Spanish economy. When the crash came, it was catastrophic. It was bad for the environment. All the people that invested, some people did well, some people cashed in, but a lot of people didn't. A lot of people, there were more winners than losers, many more losers than winners out of that experience. And subsequently, it left Spain very scarred. I think we're still living with the scars now today. I mean, for example, there's no new building.
Yes.
But they were building far too much at the time. Everyone, I was aware of companies that were bakers, for example, that had been bakers for generations, and all of a sudden they were diverting all their resources and time and borrowing to get into development and real estate because it just seemed such an easy way to make money. And there were quite a lot of company. I mean, Danny, I don't know if you know Danny Spices here in Spain. I mean, they're still going. They weren't finished off by that, but it's a big manufacturer of condiments and spices. They're in all the supermarkets. And I remember he had developments in Ibiza, which were after the bust, they were sort of on the market to be for sale as broken developments. And so it was a very distortive, and it was then left with Spain. I think it gave the impression, now we're not building enough homes because everyone was scarred by that experience. Banks don't really want to let for many years. I mean, now they say they do, but they didn't want to lend to developers. And it gave the impression that it was everyone's a speculator in real estate. And now a lot of the political narrative today is all about the speculators. And the irony is there are no speculators left today in the Spanish property industry and the sector, because it's just impossible to speculate and make money. But it's like the boogeyman.
And would you say this is similar across the national market, the non-resident, the resident markets, or
what the situation at the time?
Yes, at the time.
Well, yeah. I mean, the whole crazy bubble had pumped up in all segments. But I remember going to, down in on the Costas, like the Costa Blanca and the Costa del Sol specifically. I remember being on the Costa del Sol, and there was at the same time back mainly in the UK and Ireland, much more so than Germany, for example, and France. So the big markets were always the UK, Germany, and France, and it used to be UK number 1, France number 2, Germany number 3, and this affected the British market much more, and also there were quite a few Irish buyers, many more Irish buyers around at the time. So it was mainly the UK and Ireland that were affected by this sort of off-plan investor, where they would buy. There was a bit of a boom in a lot of programs on the television and lots of magazines.
Ireland as well,
about home in the sun, invest in, get a holiday home, move abroad, go and live in the sun, go and live somewhere nicer. And why don't you make some money as you do it, which was the idea, buy off plan, buy 3 off plan, flip 2 and keep 1. The 2 flippers will pay for your home in the sun. And so that was very much, and it was a completely different market to the local market, because locals were investing furiously as well. And there was also a lot of immigration fueled purchases, and Spain was going through there was a lot of immigration at the time from South America, and that was to come and work on the building sites, and they all needed somewhere to live. And so a lot of immigrants were also buying, and they could get mortgages without any trouble, so they were buying, and the locals were buying, and then foreigners like Brits buying on the Costas, and a lot of off-plan. It was very much an off-plan business at the time, and that really came unstuck and was very turned out to be, although the early adopters might have done okay, and I know that there were people who bought off plan and sold at a great. They flipped their contracts at a great profit, but that then fueled it was always the first ones that works for them, but everyone then piles in to try to do the same, and it doesn't work out for them.
And how did you see unemployment? Because that was on the rise as well after 2007. Did that have an impact on the property market and people paying their payments?
Yeah, well, in 2007, things were starting to the problems were starting to really show up. Lehman, was that 2000 or 2008? When was Lehman? Do you remember?
Not sure.
2008, I think it might have been. But anyway, there was stuff happening in 2007 that was already signs were showing. But I think that there was still because of the inertia, there was still a lot of people, a lot of developments were still breaking ground in 2007, even though they were going to, hit the wall by 2009. But unemployment didn't really start going up until 2008. I think it was 2008, 2009. The bottom was in 2013, but it was dramatic. It was absolutely dramatic.
No, absolutely. And what about the prices? I mean, we have the peak in 2007 and the trough in, was it 2013?
13, 14. It depends on where, what and where, but I think nationally, as an average, I think it was 2013 or 14.
Yeah. I mean, is it correct to say that generally property prices fell 30 to 40% and over the cost is 50%?
Yeah, that's fair to say. It depended on specific markets because some were more overvalued than others. But I remember by 2011 or 2010, 11, you could already, when the crisis was really biting hard, although it still had some years to run, but in the early kind of crunch of the crisis, you could buy, for example, prime real estate in Barcelona on Passeig de Gracia, buildings for less than their replacement cost, which meant that it would cost you more just to build it. And that meant the land was free. And this was Barcelona's prime real estate. So there was the opportunities to be had, and prices really did. I mean, in some areas they went down 70, 80%, but I think across the board, by the national average was something like 40%.
Yeah. And you said earlier it hasn't really recovered. How long do you think it took for confidence to rebuild?
Depended where. Once again, there's so many different segments, and Spain's a big country. But for example, Barcelona came out of it much earlier than other areas. But it finally, we're now, it's fair to say, on the coast and islands, which is where most of foreign people are interested in, and let's say the big cities, because there's still large parts of it's a massive country, Spain, and there's large swathes of the interior which are struggling with depopulation. Villages are being abandoned, but that's completely different. That's sort of outside of the market almost. But on the coasts and the big cities, where it's now been quite a few, there was obviously a recovery that started in 2013 and had caught up with all areas by about 2016. But by 2019, before COVID, it all started to cool off again, mainly due to government policy. But then after COVID, it roared back. But it's interesting to compare to 2007, which is when prices were at their peak and sales were at their peak. That was the kind of pre-financial crisis boom time peak. And we're now in 2026. And so in 2025, for the first time, transactions, so house sales, have recovered, are above 2008. So they haven't quite got back to 2007 the peak, but they're on their way. They're very close. But prices are, for the first time since 2007, average Spanish house prices are now above where they were in 2007, but only in nominal terms. If you adjust for inflation, prices today are still 20% below what they were, house prices, than they were in 2007.
And how do you think, now that most of our clients anyway are on a fixed rate, do you think that will prevent this happening again? It's making the market more resilient?
Yeah, no, I mean, I think most people would agree that it was that loose lending, the careless lending, and just the wave of, it's like a tsunami of money that sort of recycling Northern European savings into Spanish real estate because there weren't good investment opportunities in Germany at the time. Germany was going through a restructuring. And so those German banks with a lot of excess savings, and now that we were one currency zone, they were sending them down to Spain, where all of these cajas and banks were just lending them out. So there was way too much. It wasn't fueled by Spanish savings, put it that way. The lending boom. It was fueled by European savings that all of a sudden become accessible to Spanish lenders, and so that undoubtedly fueled. I don't think if Spain, if it hadn't been for the introduction of the euro, I doubt that boom would have been hard. We've always had cycles. But the craziness, the insanity of that particular boom, we couldn't have reached those levels without the introduction of the euro and its access to savings that Spain didn't have.
Yeah. So looking at today, in 2007, the blind spot was excessive credit, overconfidence. What would you say today's would be? Today's
what? Blind spot?
Yes.
Well, we're back to high sales and prices that in nominal terms have, for the first time since 2007, have broken through the 2007 previous peak. And so, the obvious question is there another bubble? Mm-hmm. If those were markers and symptoms of a bubble at that time, then surely if we have a similar level of sales and higher prices today, then aren't we in another bubble? But there's good reasons to think that, although I don't think it's sustainable, I don't think we're in a bubble. That was clearly a speculative bubble. It had been completely pumped up by speculation and easy credit. And the situation today is completely different. So one, house building is arguably, clearly Spain is building far too few homes. There's much more demand than there was at the time. So there's a lot of immigration into Spain. There's a significant immigration into Spain today. The population is growing. That fuels demand for housing. But they're not workers coming into to work on building sites. They're working in other parts of the economy. The tourism sector is doing very well, and logistics. There's a bunch of things. What was the problem was back then? They were all coming to work on building sites. Yeah. And they all needed, and they were also buying a home. But they all left when the building boom crashed. They all left. Today, there is no building boom. We've got no building at all. It's effectively building way too little. So that's one thing. And the lending standards, Mortgage Direct would know better than me, that they're completely different and that they have much more stringent rules. Self-certification, is that a possibility? Can you self-cert today on a mortgage?
No,
you can't. No, it's not possible. The LTVs, I think they've loosened them a bit. What is it, 20% or something?
70% for a non-resident.
Okay, well,
borrowing.
I think it. So, and you won't get 100% or 120% by fudging the figures. It's just not the credit conditions are just not there. They're completely different.
Absolutely.
So it's on the one hand, we're not building enough, but the population is growing and the economy is doing relatively well. It's certainly one of the best performing economies in Europe and seems to be based on reasonable fundamentals. So I'd argue that it's a very different situation. The problem is one of the problems is that there's not enough rental housing, so people have to buy. And that's also driving up prices.
Yeah, absolutely. And what about the shortage of stock? Do you see that prices are just going to keep on going up?
Well, no, because there comes a point when people would like to buy but can't because they can't afford it.
Yeah.
And so I think we're kind of probably not far from that. I have no idea. But my guess is that we're reaching a point where all the room for price increases that. But another thing, prices fell a lot after, and I've seen lots of people like to compare how prices have gone up, both rental and purchase, since 2013. So they choose the nadir of the bust as the benchmark for how as an to prove the point that Spain's prices have in a bubble. They've got, but they chose an unnaturally low level, which was at the bottom of a terrible crash. And so, but yeah, prices are definitely challenging now for the average salary.
Yeah.
But for foreign people buying in Spain, it's still, it's not a bargain. There was a period of time before the last boom when Spain really was cheap. It's no longer cheap. It's still probably, it depends what you're comparing it to, but good value. But it's not a bargain.
Okay, great. Thank you. And a couple more questions before we close, Mark. So when we asked you to speak on this podcast, the situation in Iran hadn't happened then. What are your thoughts on that and the impact it may have or not on the Spanish property market?
Well, it's a very niche way to interpret the situation in the Middle East. But I suspect that certainly in some niche segments, so specifically for the kind of people who might otherwise have considered buying, who were thinking of buying in Dubai, they might now be, well, undoubtedly will be having second thoughts about that. Certainly whilst the situation is like it is today, and I think for several months after it, because these kind of dramas and crises, people don't forget them immediately. And so I can see it being possible that people who were considering buying in a place like Dubai, because of the, it's a sunny place and it's got good fiscal advantages for if you live in, as compared to living in the UK. And they might now look at Spain with new eyes, thinking, well, it's safe. The Balearics, for example, Mallorca or Marbella, for those people who might have, I'm not saying that all the people that buy in Dubai are all wealthy, but there's certainly a segment who are competitive between places like Marbella and the Balearics and Sotogrande, Madrid and Barcelona as well, or the UAE. And some of them will now probably be discounting the UAE for now. And I can see that having a bit of an impact, or being noticed that some high-end brokers or people in certain parts of Spain might benefit from that as competition.
Yeah. Thanks, Mark. And last question, and thank you ever so much for answering everything this morning. And so just coming to a close, how do you see the next 20 years in the industry? We've done 20 years Mortgage Direct, and we talked about 2007, but how do you see the next 20 years panning out?
That's quite a question. 20-year crystal ball.
Yeah.
I don't know. I mean, I think that I don't see any reasons. I mean, 20 years is too long a horizon for me to even imagine it. I mean, I'll be glad if I'm just even around in 20 years. But I think that Spain is, on the industry, the real estate sector in Spain for the next 5 years, let's say, I don't see the way things are with the global economy and the Spanish economy and Spain's perennial attractions as a place to live, and it's as a member of the EU, and it's for all its faults, and nowhere's perfect. It's perceived, and it's genuinely true to say that it's quite a safe place. It's a safe place to live. It's a very nice place to live, and it's a modern European country. So, I mean, if there's no major external shock, I don't expect the boom that we saw in 2025 to carry on booming. I expect it to cool down and settle down, but I don't see, absent any external shocks, I don't see any reason to expect a crash or some sort of major downturn or recession in Spain. So I think, let's say, for 5 years. And on the lending side, I don't know you guys are the experts, Mortgage Direct are the experts, but I haven't picked up any reason mortgage rates, Euribor is kind of steady and by historical standards pretty low. I don't know whether that might change or not, but I'm expecting things to be steady, let's say, for the next few years.
Great. Well, thank you again, Mark. A real pleasure having you on this podcast.
No, my pleasure.
Thank you.
Thank you.
Mark, this conversation reminds us that markets don't collapse because everyone is reckless. They collapse because risk feels normal until it isn't. For anyone listening, the lesson isn't simply, can you get a mortgage? The real question is, would your mortgage payments be at risk if the world changed? Mark, thank you for your insights, not just hindsight. This was Chapter 2 in 20 Years of Mortgages by Mortgage Direct. Each episode explores a moment that shaped how international buyers navigate Spain and what those moments still teach us today. Thank you for listening. We'll see you in the next chapter.